Welcome back to Lamb's Cryptoverse. Today, we're going to talk about one of only two total composite indicators for Bitcoin that I could find on all of the hundreds of websites that I've looked at. Now, what these composite indicators do is they show you where we are in the bull or bear market cycle of Bitcoin, so they're pretty useful. They're especially useful if you don't have the experience or time to analyze the crypto market, or you're not comfortable predicting the bull bear market yourself. And of course, timing the market is nearly impossible. So it's always great to have some kind of tool to help you. And so I could only find two tools. The two of them are, one, the CBBI indicator by Colin, and I'm going to show you his website in a moment. And two, the one from the infamous crypto guy. His name is Ben Cohen, Cowan, I should say. He owns the website / YouTube channel called Into the Cryptoverse. So let's get started. So this is the one I was telling you about first. This is Colin Talks Crypto Bitcoin Bull Run Index. And he called it CBBI. That's what he calls it. And basically, it's been trained on to pick. Basically, the key point is that's been trained to pick blow-off tops specifically, not pick the bottoms. But it seems to be useful for both. So it's been trained on the two blow-off tops, 2013 and 2017. If you hit facts here, you can find all kinds of background information of this indicator. And he talks about how he designed it, why he designed it, how he uses some AI for it, all kinds of good stuff. But what I want to focus to you on is that there are some issues we have to deal with when you're talking about other people's indicators. And I got my handy notebook out here to go over them. First of all, there's the issue of multicollinarity. That's basically, actually, I could show you on a website the definition. It's the statistical concept where several independent variables in a model are correlated. So you have to be careful with that. Even without knowing what that means, like you could see that you got to be careful when you're using one data set. Because when you're using one data set, that data set is probably going to be correlated. And so here's what I mean. These, I think I said 9 factors. I think he's got 9 charts basically that he's looking at. And he's making a composite. So when you do that, they tend to be correlated with each other. And these charts are based on prices. So of course, the charts are going to be correlated with each other. So when they all reached rock bottom, which is kind of where we are now, you're going to be like, oh my God, all these charts are saying that they're bullish, that we've reached rock bottom. But remember, these charts are based on pricing charts. And if you look at the price of Bitcoin, I think we're down 77% from the high. And that's near the lowest levels we've reached in history. We've gone lower. And some other bear markets, like I think we've reached as low as 85% from the top. But the point is, when you're that low, it's of course we're going to be near the bottom, because if you're 77% from the high and you're looking at pricing charts, right? You can see my hand now. You can basically, when you're 77% from the high. Let's call it 75%. That means you're at 25% from, or 75% off the top. So that you're low at 25% level. So I'm going to show you the chart, the composite index, and you're going to see what I'm talking about. But before we go there, let's talk about some other negatives. I'm going to read them off quickly. Number 1, number 2. There's a short look back period, because remember, Bitcoin just came out in 2009. Number three, this is a big issue I have. This chart, this composite index, does not look outside the pricing data set. So it has no idea what's going on with Powell, what he's doing, that he's tightening rates, when he's going to stop tightening rates, when liquidity is going to loosen. So that's a big issue I have. And number four, Bitcoin's existence was only during a stock market bull market, and it was only during a time period of low rates. So Bitcoin's existence and this composite indicator was only came out during a period of of high liquidity. So just be careful of that. But again, if you have no time to do work, you do any work, and you're spending like 1 minute a day looking at stuff, this is a good index to look at to figure out where the dollar cost average. So let's look at it. So this is the indicator. No, this is not the indicator. This is the indicator right here. And you can see that when at this low level, it gets bullish. And another way of doing that is he's got this rainbow chart. I'm going to go back and show you here. It says a CBI rainbow line displays the Bitcoin price line using the CBBI score for the color in each point. So the lower the score, the greener it gets. So you don't need to look at the color. You can just look at the score. But the score here is very low. And so when the score is low, meaning it's bullish, the color gets green. Now, when the score is high, meaning it's bearish, the color gets red. So the good thing about using the color scoring is that he's combining the price of Bitcoin with the composite indicator. So here you can see the price of Bitcoin is about 17,000 and the color is green. So like I said, if you're not using any indicator at all, if you rely on only this indicator to tell you what to do with Bitcoin, when to scale in, meaning buy, and when to scale out, meaning to sell, this would be a good indicator for you. So when the indicator is red and Bitcoin's price is like $60,000, or in this case, we were at 61,200, you might consider getting hell out of Bitcoin or scaling out. As you can see, it did a good job at predicting that blow-off top in March, in this case, March 14 of 2021. Now let's go to the charts that it actually use. It's these charts here, and it also considers the halving events. So what I like about the CBBI score is that this model does consider the halving event. And remember, the halving event is very important because Bitcoin price tends to go up during the halving event or right after the halving event. So we won't have a halving event for a long time. The next halving event is going to be around between March and May of 2024. Remember, the Bitcoin halving event is not a date. It occurs every 210,000 blocks. And so people thinking maybe it's going to occur around the end of March 2024. So just keep that in mind. So let's go back to the components of that CBI index. We have 1, 2, 3, 4, 5, 6, 7, 8. Now we have 9 components. And as I said, be careful because a lot of these are pricing components. And some of these I know well and I really like them. The ones I know well and like are the pure multiple and the MVRV Z-score. There's a few versions of this. I like the Z-score because the Z-score looks at, standard deviations from the mean. And so I'm going to show you some of those right now. You've got the reserve risk, that's one component. Then you've got the pi cycle top indicator. And then you've got the unrealized profit and loss indicator. This is one that's getting a lot of headline lately, especially with Glassnode, because lately we've got lots of investors losing money. So we're at a point where we're at the bottom. We haven't been this low basically since 2015 bottom and 2011 bottom. And like Glassnode likes to say, and I like to say too, is I don't rely too much on this old data from 2012 because on-chain metrics wasn't developed back then. So I think the earliest data you can look at is 2015. So if you compare what we have now, you can see that we're at basically one of the lowest points in history. So we're basically at capitulation. And you can see that because they've got it in green here. Capitulation's in green, that green shading. Then we have hope and fear. And we've got anxiety, denial, and we've got greed. So, right? The greed's in red. So right now we're basically deep into capitulation territory. Actually, for all these indices, we're near capitulation territory. And then the last one I want to talk, second to last, is the HODL ratio. And again, we're in green, which is basically capitulation. So I'm not going to go through every single one of these charts, but what you could do on your own is look at the chart, and then you can actually go into the definition and read about it and understand it on your own so you can get a better grasp. My point to you here is just to talk to you about the overall composite index. Because if I talk to you about every single one, I'd be talking to you about this indicator for about 2 hours. So the last one I wanted to talk to you is about Willy Woo. Because remember, there wouldn't be a good YouTube video if I didn't refer to Willy Woo. And he's got a great Twitter account, a Twitter following of 1 million people. And that's where he focuses more. He focuses more on his Twitter account than he does his website. But this one's off his website. And this is what he does is he puts all his pricing models together. But the point is that you can see the Bitcoin price is near the bottom here. So it's at a good point in time, especially if you look at that pink one, the CVDD. And he talks about it on the bottom here. That's the cumulative value of days destroyed. He talks about it's picked the bottom of the market pretty well. And it talks about how coins are moving from old investors to new investors and back and forth and how they're being hodled. But we're not going to spend time talking about that. But basically, I just want to show you that at the bottom here, all these ratios and metrics are also indicating we're at the bottom. And I'm going to talk to you more about, where they are on the bottom. But basically, one thing I didn't talk to you about is this ratio measures basically between 100% and 0 in terms of where we are in that cycle. And the worst one is a pure multiple, which isn't that bad. Actually, let's click on it. The pure multiple is low, but it could get a little lower. And I think we're going to see more bankruptcies because the pure multiple basically looks at the financial health of Bitcoin miners. And so basically we're at near, I should say, a capitulation stage, but I don't think we're at a capitulation stage. We've had 2 major bankruptcies, I believe, in minor companies such as Core Scientific, but I think it could get worse. And why we haven't get worse? Well, this is getting off what I want to talk about today, but the hash rate is still too high. It's coming down, but the hash rate and difficulty rate are too high. And I still think we could get more Bitcoin mining bankruptcies. So when that occurs, you're going to see this number here go down from 18%, maybe to go down to 10 or 5%. But basically, overall, most of these components are near historical bottoms. And so if you look here, we were at about 5, I think. We're about 5. So I think this is a good area if you want to start putting your money into Bitcoin if you haven't for the first time. If you've already been investing in Bitcoin, it's a good place to start increasing or doing your DCA. But it's not, if you've been in Bitcoin for years, it's not a good place to put all your money into it. Because as I said, and let me get to the video here. This is the pricing chart. This is not telling you what's going outside pricing metrics. And I still think that the stock market could go down a lot. The S&P is still at 4,000, or actually it's down today. Maybe it's 3950, whatever. But S&P could still go down dramatically, and rates could still keep rising. And that's going to push down the price of Bitcoin if the rates are going up and S&P is going down. Because remember, Bitcoin has a beta of 1.5 to 1.9 or even 2 with the S&P. So if the S&P goes down, Bitcoin's going to go down. So, but today I just want to focus to you on the CBBI total risk indicator, showing how it's near an all-time low, which is good.